Hey, what's going on, everyone? On behalf of the African American Trucking Association, I want to welcome you. We're here to talk about one of the most powerful tools you have in your toolbox, your credit. We know for a lot of folks in our community, the road to financial stability has had more than its fair share of roadblocks and detours. That's why today is all about putting you, and I mean you, firmly in the driver's seat of your own financial future. So let's just start with a real question. Just take a second and think about your career, your goals, everything you're trying to build out there on the road. Right now, at this very moment, is your credit score an open highway, clear sailing ahead, or does it kind of feel more like a roadblock, maybe a way station you just can't seem to get past? Because here's the thing. In this industry, in trucking, good credit isn't just about getting a loan. It's about freedom. Plain and simple. It's the freedom to finally stop being a company driver and become your own boss. The freedom to build a business on your terms. And the freedom to create something lasting for your family. So in this first section, let's break down why your credit is really like your career co-driver. It's right there in the passenger seat with you on every single run. We're going to look at the day-to-day, real-world impact it has on your life. Think about it like this. Your credit score is kind of like your DOT safety record. Before a lender gives you anything, a truck loan, a fuel card, even a good rate on insurance, they pull your score to see how risky you look. It directly steers your ability to get that truck financing. It can mean way lower insurance down payments. It's the key to getting approved for the fuel cards and business accounts you absolutely need to operate. It can even make a difference getting approved for a place to stay when you're over the road. And yeah, it is the #1 thing that paves that path from being a company driver to becoming an owner-operator. And listen, this isn't just some theory from a book. This happens every single day. We see good drivers, man drivers, earning great money, getting denied the truck that could completely change their life, all because of some old collection account hanging around. Your paycheck alone just doesn't tell the whole story to a bank. Let's put some real dollars and cents on this. For the exact same truck, a driver with a strong credit score might only need to put down, say, $2,000. But a driver with weaker credit, they could be looking at a $10,000 down payment. Or even more. That's an $8,000 difference. That's a huge hurdle that can put the dream of owning your own rig on hold for years, or even kill it completely. Okay, so now we know why this is so critical. Let's pop the hood and take a look at the engine itself. You got to understand how it works to take control of it, right? So in this next part, we're going to break down the 5 main things that actually drive your score. No myths, no confusing jargon, just the straight facts. Now, at first glance, this chart might look a little complicated, but check this out. It's actually really simple when you see it. Your score is made up of 5 pieces, but look closely. Just 2 of them, your payment history and how much you owe, make up a whopping 65% of your entire score. That's actually great news. It means that's where you have the most power to make a real, noticeable change and fast. So let's talk about the heavyweight champ, payment history. 35% of your score. It's exactly what it sounds like, your record of paying your bills on time. A single late payment is like getting an out-of-service violation on your driving record. It can bring everything to a grinding halt, and that negative mark can stick around on your report for up to 7 years. All right, next up, coming in at 30%, is amounts owed. Now, this one is mostly about what they call your credit utilization. It's basically a ratio of how much debt you're carrying versus how much credit you have available. See, maxing out your credit cards really hurts your score, even if you're making those minimum payments on time. To a lender, it just looks like you're stretched too thin. And the other 3 factors kind of round out your whole financial picture. Length of history is just the average age of your accounts. Older is definitely better. Credit Mex shows that you can handle different kinds of credit, like a truck loan and a credit card. And new credit, well, that's just tracking how often you're applying for new stuff. Applying for too much, too fast, is a huge red flag for lenders. Okay, so you know the 5 factors now. Let's talk about where you can actually see them in action. It's time to learn how to read your own financial dashboard. We're talking about your credit report. That's the document with all your history and the score that's generated from it. So what's the magic number we're aiming for on that dashboard? Well, every lender is a little different, but a good rule of thumb is that anything over 650 gets your foot in the door. For truck loans specifically, you'll often see lenders wanting at least a 600. But the real sweet spot where you want to be is 700 and up, because that's where you get the best interest rates and the best terms. That's what saves you thousands and thousands of dollars over the life of that loan. Now, you're probably going to see 2 different names for scores out there, FICO and VantageScore. What's the deal with that? Well, think of it like using two different GPS apps. They're both using the same map data from your credit report, but they might give you a slightly different score, a slightly different route. The key thing to remember is that most lenders, especially the ones financing trucks, they're almost always looking at your FICO score. And this right here, this is a point that trips up so many drivers. You can have two people with the same CDL driving the same lanes, bringing home the same exact money. One gets approved for that shiny new rig, the other gets a flat-out denial. The difference isn't their income. Your income doesn't automatically fix your credit. The difference is the story their credit report is telling. All right, understanding all this stuff is one thing, but action is where the rubber really meets the road. So let's get into your 90-day tune-up. These are practical, simple steps you can take to build a stronger score starting today. It really just comes down to 4 basic steps. Number 1, monitor your score and reports. You can get them for free, so pull them and check for any errors. 2, make all your payments on time. Every single one. No excuses. This is non-negotiable. 3, start paying down those balances, especially on your credit cards. And 4, build your history responsibly. Manage any new credit you get very, very carefully. And here's a really powerful target for that 3rd step. You want to aim to keep your credit card balances below 30% of your credit limit. So if you've got a credit card with a $1,000 limit, try your best to never let the balance go above $300. Seriously, just hitting this target can give your score a major boost. And at the same time, we've got to stop hitting the potholes that are holding us back. Stop co-signing for other people. When you do that, their financial problems can become your financial problems real fast. Stop ignoring those collection notices. You have to face them. Stop maxing out the credit cards. And please, stop applying for a whole bunch of new credit all at once. You see, all of these steps, all of this knowledge, it's all about one thing. It's about putting you back in the driver's seat. It's about empowering you to grab the wheel and get on your own road to ownership, to building a legacy. And please, if you hear nothing else today, hear this. Your credit score is just a number. It's a tool that a lender uses to measure risk. It does not, and it will never, measure your worth as a person, as a professional, or as a member of our community. It is simply a tool, and now you're learning how to use it. This quote just nails it perfectly. Your CDL, that gets you in the cab and puts you on the road. But it's good credit that truly unlocks the door to better financial deals, to real business opportunities, and to the chance to build something that's going to last. So as we wrap this up, I want to leave you with one final question to take with you. Thinking about everything we just talked about, what is one small thing, just one, that you can do this week to get started on improving your credit journey? Because understanding this tool, it's the key. It's the key to building not just a job, but a career and a real legacy for you and your family. The African American Trucking Association, we exist to educate, to support, and to advocate for Black truckers building sustainable careers in generational progress. We are here to help you take the wheel. All right, drivers, welcome. This is the first module in your financial education course from the African American Trucking Association. I'm Andrew, and for the next few minutes, we are going to get you road ready for some real financial success. And you know what? We're starting with the most important pre-trip inspection you can possibly do, the one on your credit report. Okay, let's get right into why we're even talking about this. It's simple. Your credit is the key that starts the engine of your business. Just look at the difference here. A score below 600, man, that can lock you into some sky-high interest rates on a truck loan, costing you thousands and thousands of dollars over time. But a score over 700, now you're in the driver's seat. You get access to much lower rates, saving you money that you can put right back into growing your operation. It affects everything from financing your rig to getting better loads. So that's the million-dollar question, right? How do you get into that low-rate lane and stay there? Well, the journey doesn't start with running out and applying for new credit. Nope. It starts with a real thorough inspection of what's already on your record. It's about knowing exactly what's under the hood before you even think about hitting the road. So let's break this down a little more. I want you to think of your credit report like the official maintenance log for your financial vehicle. Lenders, they're a lot like DOT officers. They want to see the whole history, not just your last oil change. They use this log to figure out if you're a reliable operator. And this financial maintenance log? It's kept by 3 major separate companies called bureaus. You've probably heard of them: Equifax, Experian, and TransUnion. These are the official record keepers of your entire credit history. Now, here's something that trips a lot of people up. You'd think your report from all three would be identical, right? But that's almost never the case. And there are two big reasons why. First, a creditor, say a credit card company, might only report your payments to one or two of the bureaus, not all three. They don't have to. Second, they all get updates at different times of the month. So just like one single inspection report doesn't give a DOT officer the full story, one credit report doesn't give a lender the full picture either. That's why we have to look at all three of them. Okay, so where do you actually get these reports? Now listen up, because this is absolutely critical. You have to go to the one place that is safe, that is official, and that is 100% free. Don't get pulled in by those flashy websites promising a quick fix. This is it. This is the only web address you need to know. Annualcreditreport.com. It's the official site authorized by federal law. Any other place asking for your credit card number or promising to magically boost your score overnight, that's a detour you do not want to take. Stick to the official route. And this right here is a really important distinction to make. The report, that's the detailed maintenance log we've been talking about. Every account, every payment, all the nitty-gritty. The score, well, that's just a 3-digit summary of that log. Think of it like the final grade on your report card. And here's the best part. Pulling your own report to review it is called a soft inquiry. It does not, I repeat, does not hurt your score one bit. You can and absolutely should check it. All right, let's pop the hood. When you get those reports, you're going to see a ton of information. And I'll be honest, some of it might look a little alarming at first, but let's just take a breath, take a calm look, and talk about what's totally normal to see. No need to panic. You might see an old late payment from way back, or a closed account you totally forgot about. Maybe a balance that looks a little high. It's okay. So many drivers see these exact same things. A credit report is just a snapshot in time. It's not a life sentence. Improvement starts right here, right now, by just understanding what you're looking at without any shame or fear. Now, check this out. Credit experts say that about 70%, that's 7 out of every 10, of all credit reports have some kind of mistake on them. It could be a small thing, or it could be a major error that's literally costing you points and money. And that fact leads to a really powerful idea. There's nobody else checking this stuff for you. You have to be your own auditor. And when you think about it that way, it changes everything. This isn't about beating yourself up over past mistakes. This is just a simple task, finding the errors. It's just like finding a bad entry in your logbook before an inspection. So let's get into the inspection itself. We're just going to calmly scan for 4 major issues, the kind of high-impact stuff that can really affect your approvals for truck loans and everything else. These are the big ones. First things first, look at the personal info right at the top. I know, it seems basic, but a misspelled name, an old address you haven't lived at in years, these can be signs that your file got mixed up with someone else's, or even worse, it could be a red flag for identity theft. You gotta get this part right. Next up, you're gonna scan for duplicates. This happens all the time, especially when an old debt gets sold to a collection agency. You might see the original account that was charged off, and then right below it, a brand new entry from the collection agency for the exact same debt. You should never get penalized twice for the same thing. Now, most negative items, they have an expiration date. By law, they're supposed to fall off your report after 7 years. And that 7-year clock starts ticking from something called the date of original delinquency. That's just the fancy term for the date you first missed a payment on that account. So check the dates. If it's older than 7 years, it probably shouldn't be there anymore. And finally, and this one's usually pretty obvious, carefully read through the entire list of accounts. Do you see anything you just flat out don't recognize? A credit card you know you never opened, a car loan in your name you didn't take out. This is the clearest sign there is of either fraud or a really big mix-up at the bureau. Okay, you've done the inspection, you've looked under the hood, you've checked the logs. So what is the very first thing you need to do? It's way simpler than you might think. Here's your only homework for this module. First, go to that official site we talked about and download your reports from all 3 bureaus. Then, just get a pen or a highlighter and calmly go through and circle anything that looks like an error from those 4 areas we just covered. And then, this is the most important part, you stop. That's it. Your only job right now is to look and take notes. Don't call anyone, don't click any dispute buttons online, and please do not apply for any new credit. Just gather your intel. That's it. And that right there brings us to the power of what you've just learned to do. Just by completing this first step, you have already taken the wheel. You've gone from being a passenger, maybe feeling a little uncertain, to being in the driver's seat of your own financial future. You're aware. And remember this, you cannot fix what you do not understand. And today, you have taken the biggest, most important step toward really understanding your financial foundation. Awareness creates control, and control, that's what leads to better options, better approvals, and real financial freedom out there on the open road. You did a fantastic job getting through this first financial pre-trip inspection. Seriously. Now that you've got your list of potential issues, are you ready to learn how to actually fix them? I thought so. In our next session, Module 2, we're going to cover the exact step-by-step process for disputing those errors and legally cleaning up your credit report. I'll see you then.
Welcome back to the ATA Financial Education course. Last time, we got the lay of the land, figured out how to read a credit report. Well, today, we're popping the hood. We're going to do a strategic cleanup. Find and fix those errors that could be costing you real money and real opportunities. Let's get right into it.
So here's our roadmap for today. First up, we're going to talk about why a clean report is so dang critical in our industry. Then we'll zero in on what you can actually fix and walk you right through the official dispute process. After that, we'll set some priorities so you're hitting the biggest problems first. We'll also cover the common mistakes to steer clear of and then wrap it all up with a clear, simple action plan.
Okay, let's kick things off with the big why. I need you to understand this is about way more than just some 3-digit number. For a professional driver, your credit report, that's just as important as your MVR. Seriously. It's a key part of your professional toolkit, and it says a lot about your reliability.
And think about it like this, right? You would never, ever let a bogus violation just sit on your DOT inspection report, would you? Of course not. An error on your credit report, it's the exact same kind of red flag. Lenders, insurers, they're the auditors in this scenario. And for them, accuracy isn't just nice to have, it's a professional requirement.
You see, lenders, insurers, and even brokers, they dig deep into the details. Just one little error can look like a pattern of risk to them. And what does that mean for you? Well, it can kill your chances for truck financing, jack up your insurance premiums, and even make a broker think twice before giving you a good load.
Now, get ready for this number, 70%. That's how many credit reports out there have some kind of error on them. 7 out of 10. The takeaway here is simple, folks. You have to be your own best auditor, because believe me, nobody else is checking the stuff for you.
So now we're moving into the diagnostic phase. You know, the first step in any repair is knowing exactly what's broken and what you should even be looking for in the first place.
And this right here, this is a critical distinction. We are laser focused on fixing inaccurate information, things that are factually wrong. This process is not about trying to erase a legitimate late payment from your history. It's all about making sure your report tells the absolute, honest-to-goodness true story.
Now, you're going to see this term a lot, derogatory account. All that is industry speak for the really damaging stuff on your report. We're talking about things like charge-offs or accounts that have gone to collections. These are the heavy hitters that lenders pay the most attention to.
So here's your checklist. This is what you need to hunt for. First, any accounts you just don't recognize. That could be identity theft. A really big one is duplicate negative accounts, where they try to hit you twice for the same debt. Also, be on the lookout for incorrectly reported late payments, and pay close attention to mismatched info between the different bureaus. If Equifax says one thing and TransUnion says another, that's a major red flag.
Okay, we've identified the problems. Now it's time to pull into the repair bay. This is the how-to part of our talk today, a clear, step-by-step process for getting this stuff fixed for good. And here's some really good news. The law is 100% on your side. There's a federal law called the Fair Credit Reporting Act, or FCRA, and it requires that your credit report must be accurate and complete. That means the credit bureaus are legally obligated to investigate any dispute you file.
The process itself is actually pretty straightforward. First, you get your official reports. Second, you gather any and all proof you have that an item is an error. Third, you submit your dispute to the credit bureau. And fourth, and listen, this is key, you track every single piece of communication like a hawk.
A question I get all the time is, who do you actually file the dispute with? You always start with the credit bureaus themselves. That's Equifax, Experian, and TransUnion. They're the ones responsible for going back to the original creditor and verifying the information.
All right, let's talk strategy. You know, a good mechanic doesn't waste time fixing a small scratch on the fender when the engine is smoking, right? You've got to prioritize the most critical repairs to get the biggest, fastest results.
This is where you focus your energy first. Obvious fraud or identity theft? That's always priority number one, no question.
After that, you go after any duplicate negative accounts. And then you tackle any incorrect charge-offs or those mismatched late payment histories. I promise you, fixing these items will give you the biggest bang for your buck.
And remember this, you have to approach this like a business decision, not an emotional one. It's not about which account annoys you the most. It's about strategically tackling the errors that lenders see as the biggest red flags. That's how you do this right.
All right, we've covered what to do. So now we got to talk about what not to do. I want you to think of these as safety warnings on the road to clean credit, things designed to protect all the progress you're about to make.
Think about it like this. You would never try to rebuild your engine while you're rolling down the highway at 65 miles an hour. It's a recipe for disaster. Well, the same rule applies right here. Do not apply for new credit while you are in the middle of this cleanup process. It just sends all sorts of confusing signals to lenders and can actually hurt your score.
Here are the potholes I need you to steer clear of. Never, ever file a dispute without some kind of proof to back it up. Be super skeptical of any credit repair service that promises to magically wipe your report clean. It's usually a scam. Like we just said, avoid applying for new credit. And finally, don't just start closing old accounts without a real strategy, because doing that can actually shorten your credit history and do more harm than good.
And you absolutely have to watch out for this sneaky little trick. It's an illegal tactic called re-aging. This is when a collection agency tries to make an old debt look new again just so they can restart that 7-year reporting clock and keep it on your report longer. If you see this happening, you fight it. It's flat out against the law.
Okay, let's bring it all home with a clear, simple action plan. This is where the rubber meets the road. It's time to stop talking and start doing. Let's get you started. Here are your first actionable steps. Go to annualcreditreport.com. Let me repeat that, annualcreditreport.com. That is the only official, federally authorized site to get your free reports. Go through them and just pick 1 to 3 of the highest impact errors you can find. Don't try to boil the ocean here. Then, gather your proof and submit your first disputes calmly and correctly.
Always remember why you're doing this. Accuracy creates opportunity. A clean, accurate credit report is one of the most powerful tools you have for your success. It opens doors to better financing, lower insurance rates, and more trust from every single person you work with in this industry.
And that leaves us with one final question I want you to think about as you start this journey. What door will a clean credit report open for you next? Is it financing your own rig, getting those better insurance rates, or maybe building the foundation for your own authority? The hard work you're about to do, it makes all of that possible. We'll see you in the next module.
Welcome back, drivers. All right, let's get into Module 3. We are going to tackle the single most important factor for your financial success out there on the road, and that's your payment history. Seriously, think of this as the concrete foundation for your entire financial house. Let's get rolling.
So here's our route for today. We're going to start with why paying on time matters so much, then we'll get real about the challenges you face every day on the road. From there, we'll build a system that's actually trucker-proof, talk about how to get back on track if you've hit a bump, and then bust some common myths. And we'll wrap it all up with a plan you can use today. All right, let's hit the road.
Okay, first stop, let's cut right to the chase. The reason we're starting here is because paying your bills on time, well, it's the absolute king of the road when it comes to your credit. It has nothing to do with how much money you make, it's all about how reliable you are. Now take a look at this. This chart right here tells the whole story. Your payment history isn't just some part of your FICO score. It's the biggest piece of the pie, at a massive 35%. That's way more important than your credit card balances or how old your accounts are. Nothing, and I mean nothing, has a bigger impact than simply paying your bills on time. And you know, it really doesn't take much to do some damage. Just one single late payment can knock your score down, and that thing can linger on your report for up to 7 years. So the goal here isn't about being perfect. It's about being consistent. I love this quote because it perfectly nails how lenders see things. You know, they're not really looking for a flawless record. What they want to see is a steady, consistent pattern of reliability, just like your CSA score. That's what builds trust, and that trust is what gets you the yes when you need it. Okay, now let's talk about the real world, about life on the road. Because for most drivers, missing a payment has nothing to do with being irresponsible. It's all about the unique logistics of our jobs. So let's be honest about what we're really up against out there. I mean, how many of us have been there? You're focused, you're driving, and that bill is due at midnight Eastern, but you're rolling through California and you think you've got 3 more hours. Nope.
It is so easy to miscalculate that when you're focused on the road. You are not alone if this has happened to you. It's a classic pitfall of the job.
Oh, this is a big one. You do the right thing. You set up autopay for the 15th of the month. But this time, your settlement doesn't drop until the 17th. You know, a fixed date just doesn't work with a variable paycheck. The whole system's built for a 9-to-5 world, not for our world.
And this is the most important thing I want you to hear today. Stop blaming yourself. These are not personal failures. They are system failures. The financial world just wasn't designed for a trucker's life. So you know what? We're going to build our own system, one that actually works for us.
All right, let's get down to brass tacks and build that system. We're going to create something simple, something reliable. Think of it as your own personal GPS for on-time payments that works no matter where you are in the country. Here it is, 4 simple steps to a rock-solid system. First, pick up the phone. Call your creditors and ask them to move your due date so they all bunch up right after you typically get paid. Most of them will do it. Second, set up autopay, but do it for at least the minimum. This is your safety net, okay? You can always go in and pay more later. Third, have a backup. Link a second card or bank account just in case something goes wrong with the first one. And last, use your phone's calendar for reminders, but, and this is the key, set them all to a single time zone, like your home base, so you never get tripped up again.
Now, burn this into your brain. Paying the minimum payment on the due date is always, and I mean always, better for your credit score than paying the full balance 3 days late. Our #1 mission here is to protect that 35% of your score, period.
So, what if you've already hit a few of those potholes? What if you're already behind on some bills? Hey, don't panic. The road to recovery is always open. Let's talk about how to grab the wheel and get back in the right lane.
It's really helpful to know the language they use. So, let's say you miss a truck payment. The moment it hits 30 days late, that account is now considered delinquent. Yeah, it hurts your score, but you can usually fix it by catching up. But if you let it go for over 180 days, that lender might just give up and it becomes a derogatory mark, things like a charge-off or a collection. That's way more serious. The key is to act fast, because the sooner you deal with it, the less damage you have to repair.
Please remember this. One mistake, or even a handful of them, does not define your financial future. The most powerful thing you can do after you miss a payment is to immediately start a brand new streak of on-time payments. It's the comeback that matters. Over time, all that good history will start to drown out the bad stuff.
Man, there is so much bad advice out there, isn't there? You hear it at the truck stops, you see it online. It's like driving through a dense fog that can steer you right off a cliff. So let's turn on the high beams and clear up some of the worst myths about payment history.
This is a big one, right? You're a driver, you're making good money, and you think, hey, lenders will see my paycheck and they'll overlook 1 or 2 late payments. But is that really how it works? Here's the hard truth. Your income is not on your credit report. They don't see your paycheck stub. They see your payment behavior. A history of missed payments just screams risk. And it doesn't matter if you're earning 50 grand or 200 grand. Reliability beats income every single time.
Okay, here's another one we hear all the time. You've got an old collection account hanging out on your report. The logic seems simple, just pay it off and poof, the problem is solved and your score jumps right back up. Makes sense, right?
Well, unfortunately, that's not quite how it works with most credit scoring models. See, paying that collection makes the balance 0, which is good, but the negative mark itself, the fact that it went to collections in the first place, that stays for 7 years. So yeah, it's always good to pay what you owe, but just don't expect it to be some magic bullet that instantly fixes your score.
We have covered a lot of ground. But listen, knowledge without action is like a rig without fuel. It's not going anywhere. So here it is, your immediate action plan. This is what I want you to do as soon as we're done here.
This is your to-do list. It's simple. First, go to annualcreditreport.com. That is the one and only official free site, and get your reports. Second, just make a simple list of every single bill and its due date. Third, start making those calls to get your due dates lined up. Fourth, log into your accounts and set up that autopay safety net for the minimums. And finally, go into your phone right now and set those reminders. Don't just think about it, please do it today.
You know, this entire thing really boils down to one word: trust. Every single on-time payment you make is like a deposit into your financial trust account. And when that account is full, that's when you get the approvals you need for your business, for your family, for your future.
You've got the map, you've got the tools. Your payment system is going to be your co-pilot on this road to financial success. So, what's the very first step you're going to take to build yours today? In our next module, we're going to build on this foundation and get into strategy for credit card balances.
I'll see you then.
All right, welcome to Module 4 from the African American Trucking Association. Today, we're diving into one of the most powerful and honestly, one of the most misunderstood parts of your credit score, your credit utilization. Getting a handle on this is the key to unlocking the financing and the great rates you really deserve. So let me ask you something. You pay all your bills on time, every single month. That should be enough for a killer credit score, right? Well, a lot of us think so, but you might be surprised to find out that's only half the battle, and there could be a major roadblock you don't even see that's keeping your score from climbing. So yeah, let's break down exactly why those on-time payments, as incredibly important as they are really just one piece of the whole puzzle. Okay, take a look at this. This is what your credit score is made of. And yeah, your payment history is huge. It's the biggest piece at 35%, but look at what's breathing right down its neck. Amounts owed. This is a massive 30% of your score. It is almost as important as paying on time, and this is where credit utilization lives. This is the piece we are going to master today. So, what in the world is credit utilization? It sounds complicated, but I promise it's not. It's just a simple percentage. You take the balance you owe on your credit cards, your fuel cards, all that, and you divide it by your total credit limit. It's not about the total dollar amount you owe, it's about the percentage of your available credit you're using right now. To really make this click, I'm going to use an analogy that every single driver listening to this is going to get right away. I want you to think about it like this. When a lender sees your credit card is maxed out, it looks exactly like a rig that's running at its max legal weight every single day. Is it getting the job done? Maybe. But man, that thing is under constant stress. There's no wiggle room, no flexibility if something goes wrong. It just screams high risk. All right, so let's bring that idea of risk, of being overloaded, directly back to your business and your career. Why does this one little number make lenders so wary? Listen, for us in the trucking world, high utilization isn't just some abstract number. It has real-world, rubber-meets-the-road consequences. We're talking about making it way harder to get financing for that next truck. It can actually lead to higher insurance premiums. It can get you flat out denied for the fuel cards and business credit lines that are the absolute lifeblood of an owner-operator. And just think about the money here. Getting your score over that 700 mark, that's the sweet spot. That's where you get much better loan terms. And so often, it's high utilization that's the one thing keeping a driver stuck in the 600s. And that difference can cost you thousands, even tens of thousands of dollars in extra interest on a truck loan. And you know, it's interesting how lenders look at this. They kind of see it in zones, like a stoplight. If your utilization is over 70%, you're in the red zone, high risk. Between 30 and 70, you're in the yellow, kind of a caution area. But where you want to be, the goal is that green zone, under 30%. That tells lenders you've got breathing room, that you're managing your credit like a pro. But here is the absolute best part. You are in the driver's seat on this one. You can totally take control of this number. And this isn't about having to earn more money. This is all about strategy. It's about how you manage the balances you already have. So here's a simple, super powerful plan. First, you're going to look at all your cards and find the one with the highest percentage of utilization, not necessarily the highest dollar balance. Focus there first. Second, and this is a pro tip, make small extra payments before your statement closing date. See, the car company usually only reports your balance once a month, so if you can lower it before they report it, your score can jump faster. And third, have a plan for those slow months or surprise repairs so you don't have to just run up a car to its limit. And you got to remember this. Progress beats perfection every single time. Lenders love to see you moving in the right direction. Just taking a card that's almost maxed out at 95% and getting it down to 75%, that's a huge win in their eyes. It shows you're actively managing your finances. Okay, let's talk about a few common traps people fall into. First things first, when you finally pay off a card, do not close that account. A big piece of your score is how long you've had credit, and when you close an old account, you can actually shorten that history and ding your score. Also, try to avoid opening a bunch of new cards all at once just to get more credit. Every application can be a small hit to your score. Okay, so we've talked a lot. Let's turn all this knowledge into a simple, real-world action step you can take literally the second this is over. Seriously, as soon as we're done here, I want you to grab a piece of paper or just open the Notes app on your phone, list out every single one of your revolving accounts, credit cards, fuel cards, everything. Next to each one, write down the current balance and the credit limit. Then do the math, find that percentage, and circle the one that's the highest. That's it. That's your target. That's where you start. And please remember, this isn't about judging your past choices or feeling bad about anything. This has nothing to do with morality. This is purely strategy. Think of it like a chess game. Your credit is a tool, and managing your utilization is about using that tool to give yourself more power and more options. So, here's the bottom line. The most important thing to take away from all of this. By strategically lowering your balances, you're not just playing with numbers on a screen. You are literally creating leverage. You're giving yourself more power and better options in every single part of your business and your financial life. All right, that's a wrap on our deep dive into credit utilization. Thank you so much for joining us. In our next module, we're going to build on this foundation and look at things like your credit mix and inquiries, all to help you build powerful credit for the long haul. We'll see you then.
Welcome back, everyone. In this ADATA Explainer, we're shifting gears. We're moving beyond just driving and talking strategy, talking sustainability. We're going to focus on your credit, and I don't just mean the score. We're talking about how to manage it for the long haul, so you can build real freedom and success in your trucking career. So let's get right into it.
So here's our game plan for today. We're going to kick things off with your credit mix and decode what those inquiries really mean. Then we'll help you steer clear of some common traps out there. After that, we'll focus on building credit for the long term and, most importantly, connect it all back to your trucking goals. And don't worry, we'll wrap it all up with a clear action plan you can start using today. All right, first up, your credit mix. Think of it this way. A successful carrier is way more stable when they have a bunch of different freight lanes, right? Instead of just relying on one. Well, your credit is exactly the same. A good, healthy mix shows lenders that you're financially stable and you can handle different kinds of situations. So, you might be asking, what's the big deal with this credit mix thing anyway? It's actually one of those factors that people tend to overlook, but believe me, it tells lenders a really important story about how you manage your money. Let's take a closer look.
Okay, so let's just break down what we're talking about here. Credit mix is pretty simply just the variety of credit products you have. We're talking about things like credit cards, car loans, you name it. Lenders see a healthy mix, and to them, that's a sign that you're a responsible borrower who can successfully juggle different types of financial commitments.
And really, it comes down to two main types. On one side, you've got your revolving credit. Think credit cards. You borrow, you repay, you can borrow again. It's continuous. On the other side, you have installment loans. That's your truck loan, your mortgage. It's a fixed payment over a set period of time. Having a good blend of both is what really builds a strong credit profile.
And check this out. This shows you exactly where it fits in. Now you can see credit mix makes up 10% of your FICO score. And you might be thinking, well, 10%, that doesn't sound like much next to payment history. But it is a key piece of the puzzle. It's a factor that can push a good score into a great one because it shows lenders you're a sophisticated and reliable borrower.
Okay, let's roll into our next section, decoding credit inquiries. Listen, every single time you apply for a loan or a credit card, it's a decision, and it gets recorded. Doing it smartly is absolutely crucial to protecting your score.
Now, the key here is knowing the difference between a hard and a soft inquiry. A hard inquiry happens when you actively apply for new credit, and yeah, it can temporarily ding your score. But soft inquiries, things like checking your own score or getting those pre-approved offers in the mail, those don't affect your score one bit.
And that little ding from a hard inquiry, it's not just a quick thing. It stays on your credit report for a full 2 years. 2 years. This is why every application you submit needs to be a thoughtful, strategic decision, not just an impulse. Its impact lasts.
So why do lenders care so much? Well, let me paint you a picture. Imagine a driver gets denied for one loan and immediately panics, and then applies to 10 other places in a week. To a bank, that just looks like desperation. It screams financial distress, and it makes you look like a much riskier borrower. And that can, you guessed it, lead to even more denial.
All right, let's talk about the potholes on the road to financial success. These are the common credit traps that are so easy to fall into, but man, they can cause some serious long-term damage to your goals.
I bet some of these look familiar. You know those easy approval store cards? They almost always come with sky-high interest rates. Co-signing for a friend or family member, that can put your own credit on the line. And opening new credit when freight is slow, that just adds stress when you can least afford it. These little short-term fixes almost always create huge long-term problems.
And get ready for this number because it's a shocker. A staggering 70% of credit reports have some kind of error on them. This is so important. It could be an incorrect late payment, or maybe even an account that isn't yours. If you are not checking your report regularly, you could be paying the price for someone else's mistake. That's why you gotta be vigilant.
Okay, we've talked a lot about the problems. Let's shift gears and talk about the solution. This is all about building for the long haul, where consistency isn't just important, it is everything. This is how you build real, lasting financial strength.
You know, this timeline really says it all. Chasing shortcuts, like applying for a bunch of credit all at once, just leads to this volatile, unpredictable score that's all over the place. But the long-haul approach, making consistent, on-time payments, keeping those balances low, that results in steady, reliable growth that you can actually count on.
And that's the bottom line, right there. Lenders aren't looking for a perfect history. Nobody's perfect, but they are looking for a reliable one. Slow, steady, and consistent progress is the absolute best proof you can offer that you are a trustworthy borrower they want to do business with.
So why are we talking about all this? Why does it even matter? Well, let's connect all these concepts directly to the destination, your goals as a professional driver. Whether that's buying your very first truck or maybe expanding your fleet.
If you're looking to finance a truck, this number right here, that's your starting line. Most lenders want to see a credit score of at least 600. It's really the bare minimum you'll likely need to even get in the door and have your application taken seriously. It's the pass to get into the game.
But this is where the real opportunities open up. A score above 700 is often considered the magic number. This is what gets you access to much better interest rates, way more favorable loan terms, and at the end of the day, saves you a ton of money over the life of the loan. This is where you start having some real leverage.
Now let's just look at the real dollar impact here. The difference is it's stark. Driver A with a 620 score might be paying 15% interest. Meanwhile, driver B with a 720 gets a rate of 7%. On a $100,000 truck loan, that difference can mean tens of thousands of dollars. Your credit score isn't just a number, it's cold, hard cash in your pocket.
Wow, we have covered a lot of ground. So now it's time to put it all into practice. This is your action plan, the very first turn you can take on the road to mastering your credit.
Here are 4 simple steps to get you started. 1, go to annualcreditreport.com, that's the official free site, and pull your reports. Comb through them for errors. 2, just hit the pause button on new applications for a little while. 3, create your own set of rules for when and why you'll apply for credit. And 4, the most important one of all, commit to consistency.
I want you to let this sink in for a second. Building good credit is a marathon, not a sprint. Every single smart, disciplined decision you make today isn't just for today, it's building the leverage and the freedom that you're going to have tomorrow. So I'll leave you with this question to think about. Right now, is your credit a tool that's working for you, or is it a trap that's holding you back? The power to decide is in your hands, and we here at the ATRA are here to support you every single step of the way.
All right, welcome back. This is it, the final explainer in your financial series with the African American Trucking Association. You know, over the last 5 modules, you've been putting the pieces together one by one. Today, we're going to connect all those dots, from your daily habits all the way to that ultimate goal, ownership.
So, what really powers that journey from company driver to fleet owner? I'll tell you, it's not just about horsepower. It's all about the financial engine you've been building this whole time. And in this explainer, we're going to show you exactly how to tune that engine for the long road ahead.
So here's our roadmap. We're going to start with your engine for success, then chart the path to ownership. We'll get real clear on personal versus business credit, help you sidestep some common roadblocks, and then we'll focus on the big picture, building a lasting legacy. And we'll wrap it all up by helping you chart your course with some really clear next steps.
Okay, let's dive right in. The engine that powers absolutely everything is your credit score. If you want to get where you're going, you have to understand what makes it run. So let's pop the hood and take a look at the 5 key parts.
Now, check this out, because when you break it down, it's actually pretty simple. Your payment history and the amounts owed, together, that's 65% of your entire score. Think about that. That's the vast majority. It just goes to show that 2 simple habits, paying your bills on time and keeping your balances low, are the most powerful things you can do to build that strong financial engine.
So now we see how this financial engine directly fuels your goal of ownership. See, a strong score isn't just some number. It is literally the key that unlocks the financing for your first truck. Lenders are looking right at this score to decide if you're a good bet.
The first number I want you to burn into your memory is 600. For most lenders out there, a credit score of 600 is the absolute starting line. It's the minimum you need to even get in the door and have a real conversation about financing a commercial truck. Think of it like your entry ticket into the world of ownership.
But here's where the game really changes. 700. Getting your score up over this number is where you get real power. It tells lenders you are a top-tier borrower, and that gives you leverage to negotiate for lower down payments, much better interest rates, and better terms all around, which can save you thousands of dollars over the life of that loan.
Now, as you move closer to ownership, you're going to start hearing a lot about something called business credit. And look, it's a super important tool, but it is absolutely essential to understand exactly how it works with the personal credit score you've been working so hard on.
Let's use a trucking analogy here, because it's perfect. Think of your personal credit as the engine of your rig. It's what provides that initial power. It proves you're reliable, and it gets you on the road. Now, your business credit, that's the trailer. You build it up over time, and a strong trailer lets you haul bigger financial loads, more equipment, better lines of credit. But you got to remember, that trailer isn't going anywhere without a powerful engine pulling it.
You know, every long haul has its potential hazards, right? And the road to ownership is no different. But knowing where the common pitfalls are, that's the best way to steer clear of them and keep your journey on track. So let's look at 4 big roadblocks you need to avoid.
Man, it's so important to avoid these 4 mistakes. First, don't rush out and form an LLC. It's just a legal structure. It's not a magic credit repair tool. Lenders are still going to look at your personal score. Second, from day one, keep your business and personal money separate. It helps you build a clean financial history. Third, don't take on too much debt too soon. Grow at a pace you can actually handle. And finally, don't chase the title of owner before your foundation is solid. Trust me, rushing it will cost you way more in the long run than just waiting.
Okay, so we've talked about all the mechanics, the scores, the financing, the mistakes, but now let's zoom out and focus on the real destination. This isn't just about having a title to a truck. It's about the why, the reason you're putting in all this hard work in the first place.
This quote right here, it gets right to the heart of it. The habits you are building right now today, they're about so much more than just buying a truck. You are literally laying the foundation for true financial freedom, a foundation strong enough to support not just you, but your family for generations to come. Being an owner means creating real, tangible stability. It means building a business that could one day pay for your kids' education or maybe even be passed down to them. It means cutting down on that financial stress that keeps you up at night because you know you're in control. And it means creating opportunities for you and your loved ones that go far beyond the highway.
Okay, you've got the knowledge and you've got the vision. So let's finish this thing by charting your course. These are the exact, actionable steps you can take right now to put the truck in gear and start moving toward your future.
Before we hit that list, I really want this to sink in. Credit is leverage. It's really that simple. All the good habits you're building, they give you leverage. That leverage creates financial options, and those options are what allow you to build the legacy you've always dreamed of.
All right, here it is, your action plan. First, define your timeline. When do you really want this to happen? Second, go pull your free credit report from annualcreditreport.com and just be honest with yourself about where you stand. Third, recommit to all those disciplined habits we've been talking about. Fourth, stay engaged with the AIT community. You are not on this road alone. And always, always remember, mastering your credit is a lifelong skill.
So this might be the end of the explainer, but it's really just the starting line for your legacy. The road is wide open, and that horizon is waiting for you. We at the African American Trucking Association are so proud to be in your corner, and we'll be here to support you for every single mile of the journey ahead. So, are you ready to drive?